So how can we maximize our gains whilst keeping a low risk structure? Typically with our hedging method at the Trading Mentor, we're more or less trying to manage our exposure over time by adding and reducing as the market flow develops and market swings basically run with the overall sentiment or the flow of what's going on, mostly affected by things like economic data, interest rates, even geopolitical things, tensions, or just political figures saying different things. It's quite easy to do if you know what sizes to deploy into the market based on the asset you're trading and also the equity that you've got to hand. I think really that is key. You know, it's essential to understand how much you're going to sort of put in exposure-wise, like I say, based on every market situation, because every asset's different, every trader is different, every equity size is different, every market sentiment situation can differ as well. So it's really important that you get that right. But there is a very specific way to make this high returns whilst keeping a low risk or a low drawdown overall. Remember, if you want to learn, go underneath. Let's crack on with the simulation. So welcome to another series of key hedging examples, really how to do this properly. If you're someone who wants to get another angle on trading, wants to understand more or less what it means and how it is to remove the stop loss and take a different approach that in many cases is easier to manage and more profitable, then just go under this video. There's a free Discord link, and also there's the link to join our live trading room that we run every week with all members. Now I'm going to do this one on the pound Swiss. I think I'm just going to need to reload it. This is done on FX Tester 6, as many of you know. I want some price action data to go off, so I'll load it from 2008, let's say, and then I'll skip it ahead. Just need to download the data. But yeah, if you've watched a lot of these videos across the channel now, you'll see that we're in net gains on every single market move. The reason why that happens is because we have risk plans, first and foremost. We understand how markets move over time and correlate, and we manage positions well and we protect early. That's the main thing. You know, if you can't do that, you can't spot levels, you can't protect your positions early, your sizes are all over the place, then you really will struggle. So if you want full plans, like I said, that's underneath. I picked the pound Swiss for this video so I could take a random point in time. Pound Swiss is a fairly stable asset, to be honest, as are many Swiss pairs. They have sort of, dived for a long period of time as the Swiss franc has got more stronger. But nonetheless, there are many cases where they float fairly, reasonably well. So having a Swiss franc pair is not a terrible idea in your portfolio. So let's just load that back up. Pound Swiss. Okay, great. There we go. So let it load, and then I'm going to jump to a random date. I will take it after the financial crisis, because obviously we know really what's going to happen at that during the financial crisis. So there's too much hindsight. So skipping after it, I was 13 when this was going on, so I wasn't trading it. I don't know the intraday moves. I don't really know the swing moves. So yeah, I mean, this is going to be quite ideal. The only thing with this is that you don't know the sentiment. I mean, you don't really need to know, to be honest, overall, but it does definitely help. That's for sure. So if I skip to the daily, you can see we've come to where we are. We just label some levels, so we've got some price action to go off because our market flow and our hedging is going to be based on that. So I can see the market swinging. I'm just going to take a light long because it's already moved to the upside. Okay, I might catch a bit of it to the upside on that strength, and perhaps that'll take me to the earliest level, if you like, which is just above. I'm going to move this out of the way so we've got a bit more room, but there you go. There's your move where we wanted it, and there's $93. Okay, now I've got the opportunity now to take something light again to the alternate side, which is going to be short. I'm going to speed things up so we're not sitting here sort of all day. But I'm going to kill that off. $174. I'm going to take it long. Okay, I'm going to kill that off, $106. Okay, if this looks random to you, it's probably because you don't have the level spotting experience that I do and that we teach. It's not a patronizing sort of statement. I'm just saying, you know, if you're sitting here going, wow, he's just killing it every time it's in profit, it's not really like that at all. So you can see markets struggling a little bit. Any push up, I'm going to short because you're now seeing this downside movement. Keeping sizes low at all times just because I want to be able to protect, like I said, if the opportunity arises. So I would have exited this several times, but because I'm playing it so fast, I'm missing it. I think there needs to be a good medium really on how fast this thing goes. So I will kill that off as I could have a couple of times already. I'm going to add another light short. Okay. And we'll see where we get based on this higher level. I don't think I'm going to add any shorts until we get up there because there's less in the way to stop the fall. But what I will do, and mostly because of the purpose of this video, I'd say, okay, I'm just going to add a 0.3 at this point. Okay, now I'm going to add a 0.2. See if we get a fall from this level. Okay, nothing major, and we're going to probably push back above it. No, we didn't. No worries. I will kill that off. Okay, so some gains there. Now at this point, I can look to hedge. Okay, and I'm going to hedge 0.1 of my 0.2 short side exposure. Okay, so I'm long hedged, and I can kill that very lightly for 1/10 of the drawdown. And I'll just add it again with a light size short because it looks like we're starting to drift to the downside, possibly. Okay, any further push? Nope, we didn't get it. So any pullback now, because we're breaking above this key level, I can look to hedge. Okay, so I'm going to do that now. I'm going to hedge just in case we keep going up. So I've taken a bit of my exposure long. Sorry, I've covered a bit of my short exposure with that long. I'm going to add again. Okay. I can kill a little bit of it there. Do I want to add another short? I think I will. Okay, so I haven't added for a little while. I will add again. And I can kill that for light gains. A bit of a pullback now, so I'll take it long. Okay. Right, so short is now in gains. Take that out. How far have we come off the top? Well, I'll form the position a reasonable amount. Coming to some key support now as well over here. So I'm going to let it ride. Great. Bang. Straight up. Out. Short to hedge some of that long side exposure. And vice versa. So any push up now. Okay, we really want to come either side of these entries, which we have. There's $38 just taken there. If you look at the longs as well, we've got two still to the upside, which is, you know, reasonable to manage. I would just like it slightly lower if I'm going to add a long because we're not quite at that key level that we were a minute ago, okay, which we're coming to now. So at this point, I'm actually going to take a 0.15, so slightly more than my 0.1s I took before. And we'll let that ride as well. And we'll see where we end up resistance-wise. There we go. Nice move there. So I can kill that one off. And I can actually add another short just to cover some of that long side exposure again. I'm out on that short. I can take another long. You can see this key level that's forming across the bottom. Any push to the upside again. And I can look to kill that. We haven't got that push yet, but we may get it. Let's have a look. So a larger move. That would have been a decent exit. I'm just playing it too fast, I think, really is the problem at this point. But I can add again. And it doesn't really matter that I missed those exits. I mean, it will affect gains slightly because I would have normally killed it off, but it is now pulling to these shorts. So here's a situation where we might need to start to hedge because you can see we've got a running drawdown of $2,433 in minus and a balance of 101,568. So the equity drawdown, in other words, is about $865. So I'm going to want to hedge short to stop this growing beyond my control or beyond anything sensible. So there's one hedge, 124 bucks. Okay. And I'm not going to add long, or at least I'm not going to add largely long. Okay. I could add maybe a 0.1. Okay. So light long there, exited for gains. And a bit of short side action there. I could short higher up again if we get a move, ideally. Okay, so I'll take this one at 0.2 again to take out some of that long side exposure. Right, I'll kill that. $200. I'll add a 0.1. So see if we can pick up some gains here. 0.1 out. I'll add a 0.1 short. Okay, so now coming to that key area we labeled before. Kill that. Okay, my drawdown now is more sustainable, so I'm going to keep it long there. Could have killed it on the wick, but obviously we're running really quick. Purpose really for that is just so people don't have to sit here waiting forever for something to evolve. Okay, so short, cool. Short is out. Okay, another one. Exit. Take another long. So you can see the tiptoeing this market is doing now. It's very ideal for minor hedge gains, but also just getting a short in on every move. So really, really good example here of everything we're displaying on this channel and all the videos. Look how the market has fallen. Okay. Now, whoever used a stop loss probably would have lost a lot of money. Okay. Lots of people would have done that because the wicks would catch them out. But instead, if you just shorted every pop and then, you would be collecting profits as the market fell. So instead of getting stopped out, you'd be making money as you were wrong. And that's why hedging is so great, because that's the point. Even though you're wrong, you're right overall. That really is the beauty of it, I would say. So again, look, market's just slowly falling. Okay, you've got a bit of a rally now, which gives me the opportunity to exit that. But I'm now in net gains, even though I'm trading a downtrend to the long side. Okay, because every single fall, I'm also killing profits on both sides, not just one direction. Okay, I'm actually killing profits on both sides, which gives me a huge advantage over a stop loss procedure, for example. Okay, and because my sizes are sensible, I'm never going to have an uncontrollable drawdown ever, really. So I can get long again, hedging that former short of the low. Can kill that off, and actually what I will do is I will add another short. And what I'm going to do now is I'm going to close that and also close the short at the low, and I'm going to continue the long side cycle. Okay, so I really want moves up. The reason why I close that loss is because I've got the adequate amount of hedge gains to pay for it. Okay, I'm going to add another short because it looks like we're looking weak on the market. 120, 155, 115, I mean, 0.1 there. Push up and we're out. Great, another $100. Hedge those longs. Hedge the longs again. Could have killed that. I tried to pause it. I did. Okay, so what I'll do now is I'll kill one of these longs. And I can also actually remove number 11. It's going to be a little bit more of a loss, but I can hedge now that loss essentially, and I can kill that and kill that. I can add a long. And, like I said, and I have said in many videos, if you're using a stop loss, in many cases, you will pick the right direction. you'll pick it the right way, but you'll be stopped before you get to take the money. Whereas if you're not using a stop loss, that doesn't happen. You won't get stopped before you're able to take the profits away. Okay, which is a huge advantage, particularly in markets that range a lot. Swiss franc pairs can be low yield if you like. You don't have massive ranges, but they're extremely reliable, and they're very easy to predict as well, which is why our hit rate is enormous, particularly in this video, but in many other cases as well. When the market stretches, you just tighten your risk management. You stop entering every 5 minutes, and you hedge to protect. You reduce. You do everything you need to shield your equity overall, and in that way, you shouldn't have a problem. But I mean, even if I decide now I want to end this cycle and I want to stop doing this, I'm still out for 3.5% overall on all of this price action since 2012. Okay. So very easy and simple to trade. The sizes I used were very small. You could have had higher. You could have doubled it probably, or tripled it even. But you need to be careful with your equity and your sizes and your hedge plans and everything. It's one system, and it works all together. So if that sounds interesting, go under this video. We'll show you how.